manage, and then a little bit of research background, and something called Financial Action Task Force. This is an international monitoring agency, yeah, developed by the United Nations to prevent money laundering from happening. Yeah? And then I will share with you our study in Malaysia and discuss the finding and perhaps make a bit of a conclusion. Money laundering. What is money laundering? Yeah? Money laundering is actually when one does a business or in fact obtain money from illegal means. Yeah? Illegal means here meaning maybe like in this case, in this case, one of the illegal activity is actually from drugs. Yeah? People to the doctors, to the relatives, yeah, and then use the money to buy. Yeah, they put the money into many accounts. Yeah, and then withdraw the money, buy luxurious thing or buy estate or buy what we call it assets. Yeah, and then they don't pay taxes. They don't pay taxes and all that. And then this is actually what we call money laundering. So for a financial institution, this is something that we need to be very careful so that people do not abuse the financial institution for this purpose, yeah? For money laundering. Of course, if it is legal money, let's say you have a business, you put the money inside the bank, no problem. But it is illegal gotten money. Yeah? Example would be like maybe corruption. To get corruption, put money inside the bank. So bank has to be very careful about this sort of activities, and they need to what we call make a report. Yeah. So, but some people who are not very responsible, they make a lot of money from this kind of activity. This is called money laundering. Yeah. So, a number of banks. Yeah. The latest was a bank called Hong Kong Shanghai Bank. Yeah. This is an international money. So, what they have done in Mexico, yeah, they have got involved with drug cartels in Mexico, and somehow Hong Kong Shanghai did not manage it properly. The money went into the bank financial system, and in the end it was discovered, yeah, and Hong Kong Shanghai was brought into court, and the amount of money involved was a lot. This was in 2010, 2011, and the amount involved was 19 billion US dollar. Yeah, and of course this is not a very good thing to happen to any bank, because it will what we call create bad names to the bank. Yeah, so people may not want to go into the bank anymore. They want to go to another bank. Yeah, and in fact, so these are some of red flag. Red flag here meaning indicators that money laundering has happened. Okay, let's say for example, there are a lot of new depositors coming from countries that are involved in this kind of what we call it crime. Yeah, maybe for example, there are a lot of new depositors coming from countries that are involved in drugs, for example. Yeah, so these are some of the things. And in fact, this is actually becoming very worrying that even the World Bank is very concerned about this event. Yeah? And of course, when we talk about money laundering, coming together with it is also terrorism financing. Yeah? This of course has happened, and there were questions that asked who actually financed these terrorists. Yeah? So somehow the financing of terrorism and the event of money laundering went through the financial institution. So of course this thing had happened, and as a result of that, yeah, in the United States, because of the 9/11, there are a lot of stringent things that have been placed on financial institutions. For example, in 2001, immediately after September 11, USA Patriot Act was enacted in the United States. Yeah? As a result of it, what US has done is actually any country that does business with USA must anti-money laundering and counter-financing of terrorism. They have got certain rules that they need to comply. And this was the establishment of something called Financial Action Task Force, or FATF, that was introduced by the group of 7 countries, meaning developed countries in the world, and it was supported by the United Nations. Yeah? And prior to 9/11, the focus of this FATF, or Financial Action Task Force, was only on money laundering. Yeah? Money laundering, meaning illegal activities. However, ever since the September 11, another 9 recommendations was introduced by FATF, which deal directly on terrorism financing. Yeah? And then in many countries, there have been laws being introduced, and in my country, Malaysia, we have a law which we enacted in 2001 and make it operationalized in 2004. It is called Anti-Money Laundering and Anti-Terrorism Financing Act. It is a law, so meaning a financial institution will need to comply to the requirement of this law. And with respect to Islamic financial institution, yeah, in particular, like in Malaysia, not only in Malaysia but in a lot of Islamic countries, there have been a lot of negative perception on this industry. For example, yeah, all this you can find, yeah, like for example, 27 Islamic charities have been identified by US government as funders of terrorism. These are this sort of create a lot of negative perception on what we call it, on the Islamic finance industry. So what we have done, the first part of our study was to look at terrorism financing and perception in general on Islamic finance industry. Yeah? So what I have done, we look at the literature, or in fact the history of Islamic finance globally. In 1970, that was how it started. Yeah, the development of Islamic finance globally started in 1970s, where a few countries got together and tried to sort of like explore the prospect of Islamic finance. Yeah? And then in the 1990s, in Malaysia, in fact, Malaysia was one of the countries that has started Islamic banking, and our first Islamic bank was established in 1980. Yeah? And then in 1990s, the Islamic finance sector has gone beyond the Islamic banking. We have got some other institutions as well, like the zakat and the wakaf, as well as the microfinance started to sort of like grow. But of course, very unfortunately, in 2001, the September 11 happened in the US. Yeah? So though it happened in the US, this had given a lot of negative perception on the Islamic industry, which was growing at that point in time. Yeah? So first started with the September 11 bombing of the World Trade Center, and then we also have the Bali bombing and also the even famous London bombing in 2005. And all this sort of like, what we call it, these are events that sort of slowed down the development of the Islamic finance industry, yeah, globally. Yeah? And of course, I think what is actually worse, it has created a lot of negative perception. Whenever there is the word Islam, it is always related, yeah, somehow to terrorism, yeah, financing. And 2010, when the Islamic finance industry was trying to recover from the negative perception, the economic crisis tumbled up. Yeah? And what we have discovered at that point in time, when the economic crisis settled down, yeah, it was found that among the financial institutions, the Islamic financial institution was not badly affected by the crisis. Yeah, and then suddenly there was a lot of interest all over the world who wants to know about Islamic finance more. And at the end of 2012, this industry had gone almost $3 trillion industry globally. It is a big prospect. Yeah? Yeah, so this is the same thing. Yeah, initially the Islamic finance industry started with what we call retail banking, yeah, and then it went to commercial banking, and then it went to takaful and insurance. Today, when we talk about Islamic finance industry, it includes takaful and even insurance and all that. And then today, even we have got to equity fund, leasing, Islamic security, even what we call it sukuk, yeah, advanced treasury services, balance sheet management, and innovation asset management. Today, in fact, when we talk about the Islamic finance industry, it has gone beyond the bank. Okay, therefore, again, the perception we need to manage is against money laundering and terrorism financing, because we carry the word Islam. Yeah, I think this is very, very crucial. So our research is to look at anti-money laundering and counter-financing terrorism regime, because like in our country and many countries that has started the Islamic finance industry, because they were doing a lot of business with the United States, we have to comply, or we have to develop something called the AML-CFT regime, anti-money laundering and counter-financing regime, which was initiated by the Financial Action Task Force. Yeah, you follow that background. So we looked at the survey of practices. So what we have done in this, actually we wanted to look at these three objectives. Number one, yeah, just like in any research, we need to have our objective very clear. So we want to look at, to evaluate and chart global perception on Islamic finance as a result of the 9/11 and other global bombing. And then number two, we want to understand the role and function of Sharia governance. Sharia governance is part of the governance of the Islamic financial institution. And how this can mitigate negative perception on Islamic finance and terrorism financing. Yeah? And then at the end, we want to measure the influence of this AML-CFT regime on Islamic financial institution. But of course, to do this, we need to do this part of the methodology. Yeah? Number one, we review business magazine journal for the period 1999 to 2010. Yeah? We look at this database called LexisNexis. We cover top 10 for each year. Yeah? Meaning when we go to LexisNexis, we look at we rank the journal according to number of clicks. Yeah? How many people have looked at this article? So we look at top 10 for each of the years. Okay, the reason why we cover 1999 to 2010, so that it covers the 9/11 bombing, and then it also covers the global economic crisis in 2007, so that we can sort of like measure the influence. So besides reviewing business magazine, we also do focus group interview on 5 banks in Malaysia, Islamic bank in Malaysia. We went to talk to the Sharia Advisory Council and the Sharia Committee in this bank. And then we also do content analysis, because I think for a very good report, we need to mix the method, not just qualitative but also quantitative. So we went to do content analysis of the Financial Action Task Force report on the country, and then we also distributed questionnaire survey on financial institutions with respect anti-money laundering and counter-financing terrorism. You follow me so far? Yeah, okay. Because this is just sharing, yeah. I think it's important to look at, in order to achieve an objective, you need to have a very clear method how to achieve that. Okay, now let's first look at the first method, where we review 120 articles from 1999 to 2010. So for each of these articles, we look at the title, we look at the abstract, we look at the discussion and conclusion, and we categorize the article into favorable, meaning whatever is mentioned in this magazine is very positive about Islamic finance. Number 2 is neutral, so meaning there is no good or bad, they are just neutral. Or unfavorable, meaning a lot of unfavorable things being mentioned about Islamic finance. Because sometimes perception is important to be managed. Because sometimes we think, oh, I have a very nice dress. But sometimes you always think at the back of your mind, what would people think when you wear that dress, isn't it? So perception is going to influence. Yeah? So the first one, we look at 10 articles, yeah, 120 altogether. Okay. So if more than 2 positive measures, we put them under favorable because there are 4 items. If there are 2 positive measures, we put them under favorable. If no indication of positive or negative, we put them neutral. If more than 2 negative, we put them under unfavorable. We look at the title, abstract, discussion, and conclusion. So this was the result that we found. Notice, these are the years. We started in 1999. We ended in 2010. But this is what happened, what we call Islamic, the September 11 happened in 2001. So notice that prior to 2001, perceptions written as portrayed in business magazine, a lot are very neutral. Yeah? You can see the red color is huge. So meaning there is no, people are not really giving a lot of attention on this Islamic finance industry. So people are just giving a lot of facts. Yeah? But when Islamic finance, I think this one was taken at the end of 2001, after the event of what we call it September 11, you can see a lot of unfavorable started to happen right in the year of the bombing. Yeah? 2001, and then it was very bad in 2002. People are still thinking very bad about it. Yeah? So you can see a lot of unfavorable thinking about that. And then slowly it went. But you notice when the crisis happened in 2007, suddenly people are becoming very favorable about the Islamic finance industry. Yeah? But of course, we can only know this when we do research. We need to back our conclusion by that. And by the year 2010, you can see very little or very negligible, unfavorable thing about Islamic finance industry. Yeah? Yeah, so overall perception, we look at the title. Yeah, so this is actually, okay, you can see that by 2010, there's a lot of favorable thing, but okay, this is the detail of it. Yeah, in terms of title, you can see title is very important. Title of the title of what appear in the magazine. Yeah, because sometimes people will try to play with your imagination, with your perception. So title is very important. Yeah, you can see that a lot of titles are very favorable. Yeah, overall. In terms of abstract, yeah, abstract meaning what is highlighted in the journal, because not so much the title, not so much the actual content. People don't have time to really read everything. They just look at the abstract, and you notice a lot of abstract were unfavorable. Yeah? So sometimes I think when we write our thesis, when we write our paper, abstract is very crucial, because maybe that is all the time that people have to read. Yeah? Therefore, what you put in your abstract is very, very crucial, that it must be fair. Yeah? It must be fair. So you can see that unfavorable in people sometimes just look at the abstract and they make up their mind. Discussion, yeah, again discussion, a lot of unfavorable discussion happened in the article as well. Yeah? And then similarly, so this is again the same thing. Yeah. So this is actually based on the main score of 4 items. Yeah, you can see that when we rank them, yeah, the first is actually the title. Meaning if it is going to be if it is closest to 4, meaning favorable. So meaning in terms of article and abstract, this is actually what people look at the most. Yeah? And then discussion and conclusion is the list. So you can see if you have a good title, you have a very powerful abstract that will create perception whether positive or negative on your output. Yeah, so this is the same thing, but we actually put it in this graph. Yeah? Okay, as I mentioned earlier on, as far as financial institution is concerned, the United Nations and the group of 7 countries, yeah, has established something called the Financial Action Task Force. Okay, the main reason why this FATF, I like to call it FATF, so it's easier to remember. The reason why FATF was established is to, number 1, try to mitigate money laundering, and number 2 is to actually prevent terrorism financing from happening in financial institutions globally. Yeah? So in fact, Financial Action Task Force, you can go through the website www.fatf.org. You can get the what we call it the report for all these. Yeah? Like for example, money laundering and terrorism financing threat assessment for maybe, for example, Malaysia, or maybe for Tunisia, because sometimes we do not know that this is happening. Yeah? In fact, they have the report available online. You don't, because you don't have to like buy this report. You can print it out from the website. So the second part, the first part of our study was to review business article. The second part was to actually look at this report. Look at this report and then try to see whether, so these are also, again, I think for your country, we have something called the MENA FATF. Yeah? So in fact now, FATF is actually global, but we have got different regions for different FATF. Like for North Africa, yeah, and Middle East, it is under the MENA, yeah, FATF. It's called the it is something on money laundering and terrorism financing, but it is for this region. In Malaysia, our FATF is called Asia Pacific Group on Money Laundering. Yeah? So they have the report. So what I have done in the second phase of our study, we review this report. It's a content analysis. It's a qualitative study. We review the report and see what was the performance of this financial institution with respect mitigating money laundering and terrorism financing. Yeah? So this was what happened in Malaysia. In Malaysia, because we are a member of Financial Action Task Force, yeah, we have established, in fact, financial institutions, yes, financial institutions will develop, because we like it or not, we did a lot. We did a lot with the United States, or using US money. So is actually many countries in the world. Therefore, we need to develop what we call anti-money laundering and counter-financing of terrorism regime. Yeah? So yeah, this is actually what has happened. Okay, the Bank Negara, the Central Bank of Malaysia, is actually handling the supervision of money laundering and terrorism financing in the country. And we have the police, yeah. That's why our research, we invited the police and also the central bank. The police is actually the enforcement agency, and the Ministry of Finance and some of these ministries are the policy makers. Yeah, so they develop policy. So FATF, yeah, FATF is actually the UN-backed body that develops standards for anti-money laundering and counter-financing of terrorism. They have 40 standards on money laundering and 9 standards on anti-terrorism financing. So what FATF does is actually they will rate countries if they comply fully to the 40+9 standard. They will get what we call compliance, yeah? Full compliance. If they maybe do 3/4 out of the 49, then they are given largely compliance rating. If they only comply half, yeah, just like us, if you get 70, what is an A for your university? You must get 80. You get an 80, then you get an A, right? So maybe if you get 70, then you get a B. If you get 50, then you get a C. Less than 50, then you get a D. Same thing here. If you are, just an example, if you are doing very good, full compliant, you get an A. If you are 3/4 very good, you get a B. Yeah. If you are only halfway through good, then you get a partial compliant. If you are not good, then you get a non-compliance rating. So good compliant is where total score is more than 70%. So here, yeah, if you get more than 70%, then you are a very good country with respect anti-money laundering and counter financing of terrorism. So when we develop this institution, we need to be aware of this governance. And not just set up banks and develop Islamic financial institutions. What is more important, what are the required standards that are governing this financial institution? Yeah? Okay, for financial institutions in general, if they are suspicious, yeah, that there might be money that we put in the bank that come from illegal sources. Like what are examples of illegal sources? Yeah, drugs, prostitution, gambling, all the bad things. Yeah? If they are suspicious, they need to lodge what we call suspicious transaction report. All you need to do is to be suspicious. You don't need to investigate. You just be suspicious. You think that, oh, maybe this person is involved in drugs, or this person is involved in gambling, they got the money from physical cotton gate, lodge the report, and the central bank or whoever is being chosen by the government to monitor will do the investigation. For our country, the person who will be doing the investigation is the Central Bank of Malaysia. Yeah, so if any bank in Malaysia is suspicious, they need to lodge something called suspicious transaction report. Or if they see people put in a lot of large deposits. In Malaysia, if your deposit is more than 50,000 Malaysian ringgit, which is about 20,000 US dollar, if at any one time you deposit more than that amount, you need to submit what we call cash transaction report. Yeah, you cannot be happy. Oh, this person put money inside my bank. I'll be happy. You need to know where the money comes from. Yeah, so this is part of the governance. Yeah, that you need to measure. So we conducted this. We looked at the Asia Pacific Group or the FATF report. We try to see whether they are. So this is actually Bank Negara, and this is actually part of this okay, a summary of the report, because the coming one is in 2013. Yeah, the last report ended in 2007. In fact, that report in Malaysia. But you notice why I have highlighted the one in green. We compare the commercial conventional bank versus Islamic bank in Malaysia. You notice the numbers are relatively smaller in Islamic bank with respect suspicious transaction report. But of course, the number of Islamic bank in Malaysia is smaller compared to the commercial bank. But nevertheless, you can see that the percentage is much lower. Yeah. So similarly, for CDR, yeah, commercial bank is at 96%. I'm not going in detail what is actually CTR and SDR. So meaning if the large deposit as well as suspicious, yeah, you can see that the commercial bank is a lot higher compared to the Islamic bank. Okay, and then now for Malaysia as a whole, yeah, so we were given, with respect terrorism financing, we have this 9 special recommendations. A large majority of it we are in largely compliance, yeah, except for cash courier, which we have received non-compliance. Cash courier here meaning if you are at the borders, yeah, because like in our country we have made it a policy that it cannot carry more than 10,000 Malaysian ringgit. That is about 3,000 USD out of the country. You need to sort of like declare. Yeah? But what was found, there were quite a number of people who carried more than 10,000 and they were not caught. So we were non-compliance. So this is what we need to actually work on. So these are all related to what we call terrorism financing. Yeah. So for Malaysia, we actually need to get 70% for you to qualify a good score. But as a country, we only achieved 67.35. Yeah. So very few countries actually obtain more than 70. In fact, majority of the countries that obtains more than 70s are the G7, group of 7, yeah? Like US and Japan and UK. Yeah? So these are the group of 7. Okay, so now we see, oh, there's a lot of difference between Islamic financial institution and the conventional. We can see that Islamic financial institution is a lot lower in terms of suspicious transaction report and cash transaction report. So we want to find out, is there anything that has been done right, yeah, at the Islamic financial institution that we can learn? So what I have done, actually we have conducted focus group interview on 5 Islamic banks in Malaysia. Yeah? The governance of Islamic bank in Malaysia is under 2 tiers, yeah? Sharia Advisory Committee and Sharia Committee. So we invited, so the tier 1 Sharia Advisory Council, so this is basically the role of the Sharia Advisory Council, advises the central bank on Sharia issue related to Islamic financial business. And then they make a ruling based on SAC, so that this is bound on IFI, court or arbitrator. So meaning if there are court proceedings, these are the committee that will be advising the central bank. Yeah, we conducted interview, and then we also conducted interview on Sharia Committee, which provide overall accountability to the board. So meaning, beside board of director, Islamic financial institution, we have a Sharia Committee, something added. Yeah. So that sort of like explain, yes, as a financial institution, you need to go through this, but as an Islamic financial institution, you have these 2 other things, Sharia Advisory Committee and Sharia Committee. So these are some of the things that they have done. So that sort of like explain why the Islamic banking are having much lower STR and CTR in there. Yeah? So this is how the governance, so I have taken this from the central bank of Malaysia. Yeah? So basically this is actually the governance framework of financial institution. They need to have something like competency of the people who are working. Yeah? They need to understand what is Sharia, what is anti-money laundering, what is financing of terrorism. They also need to have oversight. So oversight in the sense that we don't just have board of directors, we also have SAC and also SC. Yeah? And then they are also independent and confidential. These are the normal things. Okay, so that's sort of explain why Islamic financial institutions are receiving better results with respect to money laundering and counter financing of terrorism. Okay, the third what we call it method that we did was to conduct questionnaire survey. There are altogether at that point in time, at the end of 2010, 24 licensed banking, yeah, institution in Indonesia, 20 big banks, yeah, in Malaysia, and we took 12 banks who are member of the compliance officer networking group. So what is this called? This actually under the anti-money laundering and counter financing of terrorism. One of the requirements of FATF is actually bank must appoint compliance officer. Compliance officer meaning they want to make sure whether or not the banks are complying with the standard of FATF. Yeah? So we sent out what we call we sent out questionnaire online. Yeah? And out of the 12 banks, 7 banks responded, 40 responded. Yeah, very small, because we have a very small database, and we use 7 Likert scale. Yeah? So this instrument contains all the items required as FATF. Yeah? Meaning what are the things that they need to do and what are the things that they didn't do. These are the summary of our respondents that participated in the survey. Yeah? Majority are male, okay, mostly are investigator. Majority of the bank are large bank, and of course most of the bank that participated are local banks instead of. Yeah, but we also have a large foreign bank. And you notice out of the items that we asked, okay, these are, in fact, I didn't tell you, the item that we look at is actually like those related to cash. Yeah? We have cash, we also have credit card. CC is credit card, L is lending, C is cash, A is account. Yeah? So there are quite a number of it. If you are interested with the instrument, I can share that with you later on. But you can see that majority of the items that are fully compliant is related to, maybe I can share you the things. Stop these bad people from doing whatever they are doing by reporting suspicious transaction report to the central bank. But I think what is more important, you and I are responsible. Don't just wait for the bank, don't just wait for the accountant, you and I. If you're suspicious, let's for example, you are a member of non-profit organization or charity organization that collect money from other people. NGO. Yeah, they collect money, but to whom are they giving this? If you are suspicious that someone is actually abusing this, you report. You and I. Yeah? In fact, because majority of us here are Muslim, and we are driving this Islamic financial institution, and Islamic financial institution is not only meant for Muslims. As evident in 2007 and 2010, the only financial institution that withstand the economic crisis was the Islamic financial institution. Now, a lot of businesses in Korea, a lot of businesses in Europe are turning into Islamic financial institution. Yeah. Though we do have this what we call perception that whatever the name Islamic is related to terrorism. Believe me, terrorism has got no religion. Terrorism has got no country. Terrorism has no race. You can be white, you can be terrorist. You can be black, you can be a terrorist. You can be rich, you can be terrorist. You can be poor, you can be a terrorist. Yeah. Like Red Army in Japan. IRA, Island, what we call it, Liberation Island. What is it called? Island. Something in there, Revolution Army, it is actually in Ireland. This is Tamil Tigers in a poor country. This is Ku Klux Klan in the US. They call it some other name, but they are still terrorists. So I think what is very crucial, you and I have got this responsibility to actually uphold the Islamic financial institution. I think I want to actually really clap the initiative by Taib and your university in promoting Islamic financial institution. With that, I thank you.
Will be started by Professor Dr. Rashida Abdurrahman, who will speak about governance in Islamic microfinance.
This 1.7 billion people, they are at this level. So they will get loan of $1,500 US to $20,000 US. They will go for commercial banks to get loans. Now, if and those near poor, so according to this Visa International World Bank, you are poor if you are at this level, yeah? And then if you are underneath that line, you are considered upper poor, yeah? So if you're at this line, you are considered upper poor. And if you're at this level, you are considered poor. And if you're at this level, you are considered destitute. That means if you're earning less donation, you shouldn't give them microfinance because they are destitute. They were not even able to have money to feed themselves. They need money to eat, because they're at this level. So you should give them zakat or you should give them sadaqah, but in most countries like India, Norway, they are giving these people the microfinance, the loan. So what they do is, when they give the loan to these people, they will use it for consumption. So when you use it for consumption, you don't have money to generate to pay back your loan. You see? So what they do is they loan from another institution. And then they will pay back, from that money, they will pay back to institution A. And they will borrow from institution C to pay back institution B. See? So that's not good. So have in mind, if you want to have set up a microfinance institution, this one, zakat in that country, zakat or sadaqah should settle this problem. So you only give microfinance in this area, So whereby they are poor, but they are not the destitute. That means they already have consumption for their own food, and they have the loan to do business. The loan that they get is for business generated to generate income. Okay. Now, what we want at the end of the day is for them to be in the financial inclusion, which is to bring the unbanked poor into the financial mainstream, so that they are also part of us. Now, so the opportunity to undertake, so that they have opportunity to undertake financial transactions, and then at the end of the day, they can generate income and accumulate assets and protect themselves financially against unexpected adverse events. That means, they will have they can generate income and they can upgrade their living standard, from the poor to upper poor and so forth. Now, so microfinance. So what is microfinance? The definition here is a supply of relatively small loans and other basic financial services, such as saving facilities, training, health services, networking, peer support to the poor or those who do not have access to typical banking services, with a purpose to generate income. And this is important. You give them loan to generate income, hence enabling them to care for themselves and their families. So that's a definition given by Microcredit Summit 2013, and that is actually a fact that if you let them have the loan to do some businesses, they would generate income so that they would be able to upgrade their living standard. So that should be the purpose of a microfinance institution. And if you look at it here, it's just not like giving out loan, It's not just giving out loan. Okay, I give you $500 and that's it. You must do whatever business, and at the end of the day, you must pay me. That's not it. The purpose of this microfinance institution must also provide saving facilities. Teach them how to save, because the poor sometimes they do not know how to save their money. So you need to teach them how to save. You need to give them training in terms of business, the type of business that they want to do. You need to facilitate and train them. For instance, they are interested to do business in sewing. So you can help them to provide a sewing machine, and you must also tell them that the training on, that means they already have got training on how to make clothes, and then how to market their clothes. Okay, so those kind of training, and then also health services, networking is important among their peers, and also peer support group. So you need to have this in structure. For those of you who are interested to come up with this microfinance institution. So characteristics of a microfinance in general, I'm not talking about just Islamic, microfinance in general, it does not require any collateral or guarantor because they are poor. So they do not have any collateral or guarantor. It's based on trust. That means you're giving out money, so in a trust that they will pay you back. usually repaid within a time frame of 6 months to a year. So it's not like a normal loan whereby you give a loan and you pay them monthly and they can finish paying the loan for the next 3 or 6 years. No. In this case, they must finish paying you the loan within 6 months. It's a very short period because the amount is small. Yeah? And then we want to encourage them to pay. Now, compulsory, now coming back to the previous one, the time frame, now there's a few models here that you can see. I'm not sure whether you've heard of Garment Bank. Garment Bank in Bangladesh. They started that, it's by Prof Yunus. Garment Bank, yeah, Garment Bank in Bangladesh. So it started by Prof Yunus, yeah, and he's no more there, but he started it. And then Muhammad Yunus, yeah. So, and then how they do it there, the model there is by group. That means you give out a loan to 5 people, different loan individually, but they form a group of 5. Because every week they will do a meeting. And then the collateral is actually within these 5 people. One person cannot pay, the others will have to pay. Or the others will encourage the one person to pay. And they will do several things to encourage a payment. Yeah? Malaysia, they started off in September '87. And then we have Tekong, we have UOB, we have several, we have CIMB Bank, Agro Bank, and then we have Public Bank, Maybank, AmBank, DSN. Now some of the banks are active players of conventional banks. Active players of microfinance. Yeah, some of the banks. Now, and Bank Muamalat, Bank Rakyat, and Lions Bank. So these are all the conventional, all the microfinance institutions in Malaysia. Now these are the Islamic microfinance in Malaysia. Yeah, so we have Amanah Asia, Tekun, PIB, BSN, Credit Guarantee Corporation, Agrobank. Agrobank is more towards the agriculture. Yeah, and Minbar. This is in Selangor, Yam, this is in Sarawak, in East Malaysia, the Bank Rakyat in Arahnu. Yeah? So I will show you some examples of this institution and some of the products that they offer. So we want to look at the Islamic microfinance product. So before we go into the governance, particularly into the governance Sharia compliance, we will look into the Islamic microproducts. Now, some of these banks, some of these institutions, they offer Qadr Hasan. That means 0 interest. Now, for Qadr Hasan, previously, yeah, this conventional microfinance institution, they still use Qadr Hasan. They say they use Qadr Hasan, but they have 10%. They call it 10% charges. But from the Sharia perspective, yeah, as I said earlier, we are going towards that direction of perfection. Yeah? But, so when they first started as a Islamic microfinance institution, they still use this. But now their Sharia committee do not allow them to use Qadr Hasan anymore because of that 10% interest. Now I personally would say you can use the 10% interest charges, but you have to charge actual administrative charges, actual expenditure. So it's difficult to do, isn't it? If you want to charge extra, you say, how do you come up with 10%? Yeah? If you say just you plug it somewhere, that's interest, that's not allowed. But if you say 100 ringgit plus 10%, but that 10%, how you come up with 10% is the actual expenditure. That means you pay your salaries to the staff, the administrative costs of papers, the staff that have to go and meet up to the recipient. So you add it up and add up to the 100 ringgit or 100 dinar. Yeah? So that is allowable. But you cannot just pick up, and of course the amount of charges is different from one sector to another. And that's very tedious to do. So, what they've come up actually, so this is another Islamic product. It is called Ahranu. Are you familiar with this? Ahranu or Islamic pawnbroking. Ahranu. My pronunciation is never right. Yeah, no, it's not there. The pronunciation, like I said, you will never understand what I'm saying. gold, your jewelry, gold, yeah, here, yeah, that utilize gold as collateral to provide fast, reliable microcredit facility. Islamic microfinance institution, even for, remember this is the organization I mentioned earlier, Amanah Inter Malaysia. Yeah, so I'm just giving an example here. So Amanah Inter Malaysia is not using anymore the Qadr Hasan. So they already stripped that off. So they use this Murabaha community concept. Now whereby, so this is a very quite tedious, so you have to follow me with this. So what they do, this is a community market. Community could be an agriculture, community could be in any product, yeah? So you have many suppliers here in the community market. And here is the Bursa Suq Al Silat. Now this is an organization in Bursa Saham, in the stock market in Malaysia. Bursa Saham is the stock market in Malaysia, stock exchange, yeah, in Malaysia. We call it Bursa Saham, community. Yeah? Stock exchange, yeah? So you have it here, What do you call it here? Burs. Huh? What?
We have a exchange here, but for stocks, not for commodities.
Yeah. So this is the same thing in the stock market, but only for community. This is a separate, that's why we call it a separate institution in the stock market. Yeah? So okay, so this Sahabat is actually the recipient who will be receiving the loan from Amanah, from the microfinance institution. Yeah? So this is what we call Sahaba. Sahaba is an Arabic word, Sahaba. Again, my pronunciation, excuse me for that. So Sahaba, isn't it? Yeah. Okay. Friend. In English is friend. Yeah. So these are the recipient of the microfinance institution. Now, what the microfinance institution does is, they will purchase this community from this pool of suppliers. This is number one. Yeah, they will purchase it and they will pay it by cash. And what they do is, they will sell it to the Sahaba community, but with deferred payment. So this is, so the community will be sold to the Bursa, and then they will pay them by cash. So this is where the cash is being used for the loan. Yeah? So to make this Islamic, to make this Sharia compliance.